Welcome back to another video. Okay. Now, obviously from the title of this video, you know what we're talking about. Give me 1 second to light the blunt. And it's like, Jay, why are you always smoking? That's what I do, man. I just rolled another joint, bigger, man. So I got a joint, I got a blunt. I smoke joints and blunts, but if people had to ask me, I like backwoods. So we smoke backwoods and we study the marketplace. Okay. And it's always a lot of fun. All right. Now, really quick, I want to talk about how to use the right PO3. And PO3 just means power of three. Okay. How to use the right power of three dealing range when intraday trading stocks or options, rather. And that's the thing. You're not really conformed to, like, what type of actual trading you like to do, or if you're not into trading, you just like regular investing and buying shares and things like that. This is also up your alley, because imagine understanding where your terminus is, how we talked about. And again, for anybody who's new, uh, we're coming in with the DMN AMD gold back indicator. Now, really quick, there is one by Pro Muck AJ. Yeah, I had to reread that real quick. Like, does that say? Yeah. So there's one AMD indicator that he makes that's really, really helpful for something else we'll talk about later. But the main one that I like to use is DMNs. It's clean, the settings are clean, and before I even do the actual analysis for SPY, I want to go through the settings again. And so I talked mainly on just like the quick toggle so far, and how I'm setting up like the basic stuff in this area here. Okay. Now, to be clear, all right, inputs and style obviously are where most of my focus is. But when you're going down the settings, right, we talked about additional range, which allows you to basically come in. And if I'm on like again, when you see a highlighted price here, that's the power three level or number that I'm using here. Okay, so I'm on the 9, right? So if I need an additional range above me, I can do that. I can take that off. If I need an additional range underneath me, I can do that. And I can take that off. And again, we talked about DR shift. DR shifting is when, let's say, for example, um, I'm looking to see what price did up here, like, but on the 9, you know what I mean? Instead of just additional range, I can then come in and see what price did in the above dealing range, right? And so remember what I talked about with your gold back levels. Dealing ranges are printed or invisible underneath your candles. These are always going to be influencing price. Doesn't matter where it is. It could be at $1,000 for SPY, and it's still going to have gold back levels above you. Do you see what I mean? When you see these prices here, just so you understand what I'm fully saying, right? When we're looking at SPY, right? I saw a comment. If you're on the 243, that means price is showing you from high to low or vice versa. $243 worth of price. It's not going to calculate this by cents. What's going to happen is you're going to notice that, again, using a lower PO3 number, and you notice them on an hour chart. We talked about how long it takes stocks to get through some of these higher PO3s that NQ, YM, ES have no problem going through like water. But this is what's so important about this. If I'm looking as a day trader, swing trader, or even like maybe like a longer swing trader, I'll say it like that. You could come in and really say, you know what? Damn, it doesn't take price very long. This is a Tuesday. This is Friday. Now I'm gonna show you some funky, crazy shit. I don't want you to like freak out or anything. It's just that like when I'm trading stocks, right? Like me personally, I understand the importance of time. So get rid of this real quick. When I'm looking at stocks, and again, this looks in fucking sane. I understand. It does. So what I actually wanted to do was, I'll take some time to adjust the colors at one point. But just so you can see it, it's color coded and labeled. But the main point is, let's look at like last week, just so you can see my vibe, right? Just so you guys are used to seeing like my forex charts and my futures charts, color coded with the day of the week, and from trading different sessions in futures or forex. My bad, had to light the blunt real quick. And if anybody, wanted to know, my favorite woods are I like dark stout backwoods. Those are my favorite backwoods. I will forever buy them every day. So, long story short, do you see how blue is going to be my Monday? All right. Blue is Monday, 9:30, of course. My Tuesday is, again, it's sectioned off by color, right? So when we talked about AMD, this is easy for me to keep track of AMD. It's also easy for me to see what I'm working with inside of the current week, what liquidity is generated at what time or what day. I can come on and also see exactly where price starts or stops. So this is going to be so helpful coming into um, like realistically any week. And also to explain my colors, these are similar to like my AMD colors. If you noticed that, like, all this for a reason, right? We talked about the Monday is typically X or A to start. Okay. That's why this is blue. All right. This is going to be my X, right? It's too trendy. Okay. Expected price action, how we talked about. Now, what am I going to expect on Tuesday? This is the week of August 19th. What am I expecting on Tuesday if Monday was an X? A. What does A look like with expected price action? It's just nothing but consolidation. And what do you do with that? Now, I do this every video on purpose. Repetition, right? So the more you watch these videos back and the more that you hear my voice, you're going to come in and say, you know what? Damn, Jay definitely taught me that X, A, M, and then D. It's going to go in a complete order, right? So if you are, again, it's to keep from being discouraged. It's to also stay organized, and you're also understanding it's not it's not like random now. When you know to expect a day of some bullshit. Okay, you know what? This was X. Where tomorrow's going to be up, down, up, down, up, down, or some version of this that's way different. My manipulation is going to be annoying, right? It's in the name. Manipulation. It's taking out liquidity. My bad, I need the pad tool. As soon as you start that 930, right? Goes up, down, up, down, up. That's manipulation type of price action. It's annoying. It's not letting people stay very long profitable. That means on days like this, you need to come in and understand your trade plan. If you're planning to trade an accumulation day, session, accumulation week, accumulation quarter, you're going to be more on the shorter scalp side. You're not going to look to hold a nice run how your X or your D is going to give you during the week. And again, let's type it out. XAMD or AMDX. And real quick, I just wanted to give you that again as to why these are color coded a certain way. So if this is again blue, I'm thinking about liquidity. I don't know why I associate that with blue, but whatever. And again, Q1 red. Red I think about as manipulation. It's zigzaggy, right? So my bad. Accumulation is typically, going to be for XA, right? But again, my manipulation box is typically if this was AMDX instead. Let's check this one out. This is, oh yeah, no, it's XAMD. Again, two in a row. Yep. You can see it. It's too trendy on the Monday. And then this is not XA. And then the M goes too far, takes liquidity. And just so you can see what I mean, but X goes too far, A, M, and then D, right? And so this is why this is important. My if this was AMDX, A, M, D, and X, that's why these are both are green. Because they're both distribution cycles. I'm expecting it to trend or to give a nice price swing. If you don't want to be chopped up a lot, wait till distribution cycles to really trade or look for entries. You don't have to be chopped up for no fucking reason or just waiting for no reason for this to, move, trying to poke it with a stick and shit. It's not going to move algorithmically, mathematically. And that's all we talk about on this channel. Algorithms. What to expect. How to use an algorithm. You're not going to come into the marketplace anymore and say, you know what? I'm just randomly expecting shit now. Price is not going to go up at any time. It's not going to go down at any time. It's not going to consolidate at any time. You need to understand there's a time and a place and a price for everything. Now, let's get on to the main event. And again, we're talking about gold back levels, right? So, this is what I mean. And again, let's pair this to time, all right? So, if I'm starting on, and again, this is like current, right? Yeah. So I'm looking for Monday. So let's do Monday. This is like 9:30. All right. So we're gonna do a little. My bad. I forgot to change this to black last night. That's not helpful. All right. Oh yeah, yeah. There we go. Friday. Yep. And then Monday. Cool. Now, obviously, right? Before I like get into the levels, okay, I just want to like real quick. It's no different than what we talked about with market organization all week and how again you're focused on like if price is like a book, and I've taught you that narration is important, regardless of whatever concept that you like to use in the marketplace, whether it's gold back levels or um, coupled with AMD or other ICT concepts that we like to use. And I know how to use a lot of ICT concepts, over 90% of them. At this point, I would like to see, I haven't seen a video from Michael. I don't understand. I've yet to get confused by Michael, but I'm sure he'll throw me for a loop at one point. But I'm not saying his content's easy. It does take years and years and years of study to get that content down. So when we talk about liquidity and how do we know which one's going to create the high for turtle soup or which one's going to be a market structure shift to then take it downward. So then we need to start looking for sells on this Wednesday going down. But my whole thing is, right, when we're looking at last Monday, there was a bank holiday, so that's why we don't have another blue space here. But long story short, when you get into the levels, right, I'm focused on this Monday, because it was like the last Monday that we had. Okay, if we had one here, I would have focused on that. But that was my point. This is helpful for me to keep track of price. Okay, so the reason why we're on the 9, okay, I want you to see how we said before, based on the asset, how much time is being taken to go through some of these dealing ranges. As an intraday trader, or somebody who, I can day trade, I can swing, I can position trade, but my interest is really in day trading. Over time, and I feel like Michael's right about this, over time, your patience starts to thin out. That might not be for everybody, but me personally, and we all like day trading because it's not only like a more instant validation on the idea you have, it's just the whole idea of what we're doing for work gets done faster. So that's all I'm really interested in. I like being done. So like if I can get into the marketplace at a kill zone and be done by, if I'm in at 3, I'm done at 8 in the morning. And I can look for my second trade from 8 to 12. 8 to then be done at 12. So when I'm looking at gold back levels, right? Now what? This is your Friday. This is your Tuesday here. So I'll highlight the Tuesday instead. All right. Now with these two panels, right? Again, I'm still looking at the same 9 for a few weeks here. We have obviously like a stop run of the dealing range above us. And what I mean by that, it goes out of this one. And when it goes out of the high here, indicator will shift up. And when it gets back down there, it's going to shift back down. Up, back down. So we have all this movement above this dealing range, but we don't really break it or trend, obviously, super high above it. Ultimately. And again, I'm all about repetition. So before I even said anything, when you're now looking at this dealing range, and again, we can turn these off. All right, so it's cleaner. I'm talking about the ability or the inability to break into this higher dealing range above you, hold itself on the low. And the reason why I'm pointing at the high saying the low is when you shift this up, this high is now going to be a new low. This, if I come downward, if I shift it down again, this is going to be the new high of this dealing range down here. So knowing that, every time price wants to come and go through this dealing range upward and break it, okay, we need to verify that price really wants to actually interact with the one above us or not. And again, this is only $9 a price. $5.49, $5.59. This is what I mean. SPY is not going $243 in a day. It's not going $729 in a week. It's not going to do it. What it is going to do, it's going to complete that 3 and that 9. And again, if you're really trying to go for gold, and what I mean by that, really hit the home run with a crazy move, try to aim for a 27. Swing trade that shit. Watch. The reason why I look at the 3, and we'll start there. Lower the better on stocks. Okay? Mind you, we have the power to upshift and downshift. All right? I'll do a complete video on like when to shift, like benefits of shifting, half shifting, whole shifting is what we're doing right now. But when you're doing this right here, and I want you to just feel me for a second. All right? Watch. What we're doing is we're coming in and trying to fill in the space here. So remember we talking about how we have a stop run of the previous dealing range at the very top. So 559, right? Let's mark 559. We have to be quick, just change our coordinates. So we want 559, I think exactly. All right. Now, remember, everything above 559 is a stop run, right? So every time it does all this bullshit, this is nothing but a stop run, right? Taking liquidity, generating more, taking liquidity, generating more, taking liquidity, generating more, taking it out, and so on and so forth, right? My bad. Had to hit the blunt real quick. Now watch. Above 559, when we look at it through the nines perspective, yes, we get a stop run, and we're on the hour chart. But if we come in and all this silly stuff, this fills in that piece of price action that we needed. If we talk about how influential the levels are, and again, you get another stop run or a set of them above this dealing range. But notice what happens at the top of this. Let's zoom in, right? I want to go to a 15, show you. Notice every time we reference this, what did I talk about? Previous video. When we use this as a stop run, it breaks into its dealing range, takes liquidity. That's the only objective of this. So when it comes down here, you're looking to see if it's going to support from this high-low area to go back up. If it doesn't, or you already know the bias, then you're going to focus on, whoa, price rips down, failure to go to an EQ off the first rip here. When you go back up, you take the high, right to EXT level, back down, power through liquidity again, doesn't hit the EQ level, back up, where are you going to expect it? Upward. And it takes this liquidity here and lands in consolidation at a major level. This is the premium of the premium. And like I said, if power of 3 dealing ranges are fractal, this is just as powerful as looking at a higher dealing range. It does not make this less significant at all. The process is fractal, it's smaller. So when you get all this run, and again, what do I call it? Me personally, I don't care what anybody else calls it. That's what I like to do. dealing range. I call this the trap and retracement. And why I call it that? It breaks in, DR break in. So you have your doctor trap right into this dealing range. And when it does this, I'm looking to see if price really wants to interact with this dealing range correctly. Or not correctly. I'll say if it wants to complete the partition rather. Or if this is only coming up for the stop run and I can't see it yet, that's fine. Wait till you get something that is clean, that you understand and get comfortable with. So when you see how price comes here, got it. Okay, now I'm looking for price to either have trouble breaking the high or the EXT level here. So when we hit here, I start to see price break down. I see power through liquidity. Yeah, it's likely to break down from here and then go from a premium to a discount. No problem. I forgot to deliver it and called me. I had to go downstairs and grab it. Do you ever like order food and totally forget? That was me a lot of times when like I'm in work mode and I'll like completely forget um I'm working on something, right? So there we go. The biggest thing that I want to talk about here is again how you're watching price being influenced by the levels and you're keeping organization of your dealing ranges. And a lot of people have trouble because typically they see how like it looks as though price is like not really fitting the levels or these look random or it doesn't quite hit the bottom. Then when you see it here, it just keeps breaking. But they don't understand what's happening from left to right all the way. They just see that they go to a random dealing range and this looks off and they're unsure of what it does all the way. So then you either disregard it, you take it off, you say fuck the logic, and that's the wrong thing to do. Instead, you're still understanding the basics here. When we have these cheat sheets, right? And again, going through some more of these settings. Um, right here, you can take off auto PO3 number. You don't have to do that. You want to come in and do it manually. So based on your needs at the time, you're gonna, switch dealing ranges and use your power 3 number here. You're gonna come into this menu a lot. So again, look at how many numbers that the algorithm references at once. 3, 9, 27. The math is all the same. 3 times 3 is 9, 9 times 3 is 27, 20 times 3 is 81, 81 times 3 is 243, 243 to 729, and so on and so forth, right? And you can even see like 177,000. These really big ones are great for Bitcoin. So like 19683, 59049, these are great for Bitcoin. And we're going to do a video on that later today as well. So again, this whole series here is about different assets and how different dealing ranges based on size are helpful for your style of trading. Okay. And so again, I love the three, especially because SPY is not moving that far through these dealing ranges that quickly in reality. The price action itself is not slow, no. But when you're looking at something like this, a lot of people get excited about a 50 cent, 75 cent, $1.50 move on SPY, and they go take screenshots and show all their friends. And you're like, okay, sure. But again, there are those moments where people catch those $5, $7, $8 moves. Amazing. I love seeing it. But imagine coming into the marketplace and you run $3 at a time, $9 at a time. All your trades are between $3 and $9 moves, all of them. And you're not going to accept pretty much any less than that because you understand where the terminus is. You just need to come in with the bias and whatever model that you actually like to trade. So if you say that you like order blocks, focus on the order block partition or level, I'll say. You like fair value gaps? Focus on the fair value gap level. Mine's customized to be blue. And again, back to some of our labels on the side, right? Just so you could feel me out. Remember, we have my, there we go. Fair value gap level in blue. My order block is yellow to blue. My liquidity void, blue to this gray. All right. I might come in. I should probably like let me know in the comments what color we should use for liquidity void, and I'll show you how to change colors real quick too, just real quick. So we talked about quick toggles at the top. We talked about DR shift, where if you want to go study price, you can go to any dealing range at any time to go check it out. You can even go forward and see dealing ranges we're not even in yet and see exactly what the prices are and where we should be aiming at above or below the marketplace in the future. It's already doing the math for you. You do not have to come in and be confused on where price might go. You can mark all of the relevant levels, high and low, and turn the dealing ranges off, trade to and from. Additional ranges, we talked on those. Turn off your auto PO3 number. You can do it manually with this menu here. All of these things you can keep standard for this part of the settings, okay? Go back time. This is a gem. Seriously. I have a lot of resources on this in the Discord. There will not be that much go back time content on the public YouTube channel. You're going to have to come into the Discord if you want to get a lot more information on this. This is where we shine. But again, you can steal the settings though. So I use go back time. I got non-GB numbers on. Color candles. I mean, you could turn those off, but I have those on. So I'll show you what those look like. So that's what that looks like. All right. But we're not going to get into the logic of that on this channel on the public YouTube. That you would like to see in the Discord. There's thousands and thousands of examples of GB time, and the lectures on those are incredible. Absolutely incredible. So what I also wanted to show you, right? Remember, we marked out the last Monday. We also marked out this Tuesday, right? And again, I'm showing you how long we interact with this dealing range, right? So I'm not saying it like this, but coming in on a basic level, and I want to get rid of a few of these because that annoys me. On a basic level between this Monday and Friday, you are like in and out of this dealing range here. You don't move too far above it. You don't move too far below it. And it plays this dealing range the entire time, support and resistance style. Does that make sense? Even understanding that price goes outside of these only for stop runs. Takes liquidity above here, takes liquidity above here. All of these are for liquidity purposes outside of it when it makes a stop run. But if you're viewing it, right, again, you're seeing where price interacts with the high and then goes all the way through it. Or makes a stop run, interacts with the low, and goes all the way through it again. You can see that. You can trade that. And the reason why this logic is comfortable for us is because when we're looking at like, I'll show you like the 9, right? Now, the reason why it moved like that is because now we're 6 dealing ranges above us. Oh, it came back. There we go. Cool. Now that's the one from down there, so we need to be on +1. Let's see. Let's take a sip of the lemonade. Perfect. Now watch this. You can hear it in my voice that I talk a lot, not just in my videos, but I mentor my other students, and we do live streams. I live trade. Um, we'll trade one-on-one together. I talk a lot, so like you can hear the strain on my voice, and so I try to keep. And plus, I smoke a lot of backwoods. So like that being said, it's like I gotta watch a lot of you know all the hits that are taken to my voice, and like over time, I mean, Michael's right. Um, you stare at the screen a lot, it gets to your eyes, and like as traders, right, you really have to love this shit, man. Like getting to some of these levels and really sitting down and saying, you know what, damn, let me figure out gold back levels. Let me see how they actually influence price, or let me work out and see like how these things are mathematically done. And it's really incredible that you can come on and do things like this in 2024. Like you don't have to do the math yourself. And gold back levels or this type of content is not like very new. It's new to us based on how we learned it. But for those who are, probably trading back in the 80s, 90s, this stuff has been around for a long time. And it might not have been called gold bag. It could have been called something else, but market makers are using this sort of logic in the marketplace. And so again, we talked about these as a stop run between that Monday and that Tuesday. Focus on this now. All right. Tuesday, we open, right? 9:30. We pop down. Now again, I'm on a 5-minute chart. I want to pop down even lower. All right. Now watch. Look at the logic here. Okay. When you pop down, you're at the EXT level. Okay. Look at the price action. It's not random. Why would it actually be a small up or a small down move, back up, and we react right from the EXT level? You need to start highlighting that. And look, 15 minutes, 5, 10, 15. It's not a long time. And you break into this dealing range, right? Perfect. Now, what do we talk about? If you're a order block trader, where are you going to find it? In your order block, right here. You have a up close candle, right? Smashed by this white one. And right in your order block section, right? And this is the 9. The reason why this is cool because the 9 you can come on and actually trade. You can use the 3 to really dial it in if you want to get really in there. But the 9 is perfect because you can still pop on intraday and kill it. And so you need a nice expansion, right? So you're in a premium. You're already looking for sells. You're not looking for buys from a premium ever. You have a That's why when you're looking for PD arrays, not going to see it so fast like that, is because I'm already looking for downside, not because of hindsight. I'm in a premium. So when we drop down into a dealing range from the top, like it does here, it drops into a premium. When it's bullish, it's going to curve and run up into a discount. Does that make sense? And it's going to support from or my bad, it's going to resist from the high, or it gives you a bearish order block like this, and you drop lower. What does it do on the way to dropping lower? What is my all blue area? When price drops through that too aggressively, that's what causes your imbalance. Mathematically, it needs to be done here. Does that make sense? We see the rebalance here, but we don't see a clear fair value gap because we're on the 5-minute. But watch, when we dip into this area, right? Watch. And again, go downward slowly so you can start to study it. So, do you see how I came from the 5-minute? Now I'm looking at the 4. And I mean, like when you're first studying this, go all the way. Don't skip a time frame. You're not going to be like, damn, well, I can't find a bearish fair value gap. He's fucking wrong. Okay, slow down, Jimmy Neutron. Okay, I guarantee you, even if it's down on the 1-minute, and like I said, this is why I'm typically trading the 1-minute. It's so much easier to find these situations. Now, what's funny about this, right? Let's start to form something. Now, we already found the order block. That was easy. But we're looking for a perfect fair value gap. Me personally, I like perfect ones. Like somebody else might come and try to form fit this one right here and be like, well, yo, that's our fair value gap. And I'm not actually disagreeing at all, because you clearly see that works. And I'll be honest, it works perfectly. It's a 3-minute, emphasis on 3, because we use the power of 3 all over the marketplace. So me finding things on a 3-minute time frame is normally like a great confirmation. I feel great about that. And this structure is shown to you. This one's a little harder for new traders. Again, that's why I don't like this one that much. I'd rather go and find a nice, really big 2 or 1-minute fair value gap. But the reason why this works, right? This is a clear fair value gap. You know, it's not very big on your imbalance part. It's a long candle in between these 2 points in the fair value gap zone. But look at the reaction points. We can't get a body to close above that. We have one simple little blip, and it drags its ass right back down. The bodies do the the wicks do the damage. Bodies tell the story, right? Fair value gap in fair value gap. And you're on the sell side. So that's why you'd be able to find this. But that's why I'm pointing it out to you. You know, I don't like this one as much. You'll be able to do the same thing. And I'm teaching the kids in my family right now. And so there's a 16-year-old, there's a 17-year-old, and there's going on 20-year-old, right? Old man. And so, long story short, if the kids that I teach in my family can do this, you can do it too. You can do it too. Fair value gap does not work outside of the right GB level. And again, this is your 2-minute. It looks the same, right? Except it's just a little wider now. Like a little bit. You see that? It's a little wider. Hold on. Here to, yep. And I could do it like that. So there you go. Again, it's a little, like I said, the 3-minute is even better than the 2-minute to me, but whatever. Who cares? But I just want to see this for my own personal study, right? And I keep going to it. I love this type of study, man. Really get into it, you know? And so if you don't see it clean there, and look, ready? That's what I'm talking about. That's why I came all the way down to show you, right from the 5 all the way to the 1 on purpose. Because why? ED arrays, they are time frame specific. That's why I say there's a million fair value gaps. How do you know which one is which when there's 3,000 of them a day? There's millions of these things. Bullish, bearish. How do we know this is not the fucking one? We're not bullish. Number one. Number two, it's not where I need it to be. It needs to be in that fair value gap gold back level. if it's going to work. I saw evidence on my 3 minute fair value gap. Is why all of this looks clean to us. Now, when we drag it down to even just a 1 minute, how we got it to now, we clearly see why it's structured the way it was. It already worked from here the first time. Fair value gap coming out of the fair value gap level. And look at the rebalance of it. Perfect. Drips. So even if you are scalping on the 1 minute, I mean, you don't have to. You can day trade from the 1 minute. Do it all day. Do it every time. I really only like get in from the 1 minute, I'll be honest. Like maybe sometimes from the 2 or 3, but I'm typically like I'm gonna be on the 1 minute taking the trade. Like there's just no other way for me to feel comfortable doing it. Like not saying I can't take a trade from the 15. It's just no point in doing that. Like the 1 minute is the same thing. It's fractal. I'd rather go into the 1 minute and see how quickly my idea can be validated. Especially if like somebody's on the 15, you might like stay for this up run when somebody like me is going to wait for this shit to work, you know? So I don't have to be in all this drawdown just because I didn't look at a low enough time frame. But you're also not attached to the 1 minute where you're not going to be aware of the 15. Does that make sense? It's all about perspective, right? And like I said, 1 minute fair value gap works here. You have a 2 and 3 minute fair value gap that works again on the second and third rebalance. Second and third rebalance. There's probably another fair value gap here if you want to use that, right? And again, we can actually check this. So it's here, right? And I'm gonna move on from fair value gap because we're gonna go to QQQ in a moment. But I'm basically just showing you like again, like why this is important. All right. Yeah. Yep. Yes, sir. What did I say? Now this is a 2 minute one. And people ask me, do rollback levels work on stocks? You tell me. Some of these are so good, you need to like really laser in on the price action to even see how amazing this IOFED was. IOFED is institutional order flow entry drill. It's not going to refill this entire imbalance. It only needs to like basically tap that shit like Instagram real quick and then literally like it and be done. Amazing, amazing rebalance. Now watch. I'm gonna highlight this. I can show you something. I'm gonna mention this really quick, and this is just kind of funny. If you know, you know. Um, this is 12/16, 12/17, or my bad. This is like 12/16 and 12/17 in this candle. That's the one that rebalances your fair value gap. This candle, 12/16 and 12/17. I'm not going to say more about that. If you know, you know. Okay. So I'll put that on screen for those who are interested. And again, 2 minute chart, right? 12, my bad. 12, 16, 17. So this 12, 16 candle was dope, right? Okay. If you know, you know. Now, onwards and forwards. Watch this. Now, always at my favorite part of the video, we talk about my favorite level, right? And again, I've been keeping it very simple on purpose. So that's time frame specific with a 2 minute fair value gap. There's four fair value gaps that we identified, 3 or 4 rather. But again, if we're looking at the levels, right? Next one that I always love talking about, I can't shut up about it. Liquidity void level, right? Now, in order to not have you thinking about fair value, let's look at I don't know. I'm trying to figure out what color to make the liquidity void. I don't know. We'll do like pink or something. It's fine. But my point, all right. Now watch. We talked about what liquidity voids do, what they look like, the function of them. Oh shit, I forgot the blunt was in my hand. All right, had to light the blunt real quick. Now, the Louis Vuitton, right? Watch this. Every time we've seen this structure, it's no different. So I can go back up to a 15. I'm just showing you the price action that was associated with this level, where it started from, okay? And again, pink box we know is my liquidity void. And I'm in a premium still, okay? We don't move from a premium into a discount until we pass EQ. So this is now a discount premium. Premium, discount, premium, discount. Sell, buy, sell, buy. All right. I'm going to drill this into your head. All right. Now watch. Watch this. The liquidity void level is where long candles come from and long insane price swings. This one is not really like a time frame specific kind of thing. You can go down to a lower time frame and find the candle that starts to like, really support from the high of this level. And what I mean by that, so do you see how we talked about the fair value stuff down here, right? It actually wicks right off the top of that or the bottom of the fair value level, which is like the start of the liquidity void level. So that means you're already looking for an insane price swing by default. You're in a liquidity void level. It's not going to function any differently. It's a 12% jump in the algorithm that requires it to be an output of long insane candles or a run. It's going to speed up the algorithm to then make the next objective, which is here. Typically, it'll land in your order block or just land shy of the high or the low. Do you see what I mean? But the liquidity void, look at all of this, and you're not going to get out or evaluate getting out until you reach at least EQ. Because look at all this. This might scare you. You might not like that. That's fine. Especially you get down here, you're not going to let all this retrace and not take the money. Don't do that. You're already too close to the end of the partition. Take a partial at least. All right. This is why we talk about lower power three numbers. This does not take long to accomplish. And again, watch this. Turn this off for a second. Turn my weekdays back on. Now watch. See how long that took. So if this was 9:30 in the morning, let's highlight that. I talked about this before where I don't like to like take the price action off. I like to like really see it. So it's like here, right? Yeah. So when we open here, right? When we start spooling down, you're not going to think too much about this gap up here, even though we leave it open. And I know a lot of people want gaps to fill how it does here. They always fill. But if it doesn't and it starts running on you, you're not going to be like, oh, well, price ran. I couldn't get in. Yes, you can. Yes, the fuck you can. There's so much stuff in here you can reference. Bearish order block. Not one, but two, but three fair value gaps and a liquidity void. You don't want to participate like kind of, I'm not saying you can't get in here because you already know it's running from an LV. You can surely do that. But this is more risk on than all this here. You want the PD arrays at the right spot. Understanding ICT concepts, or if you're a seasoned ICT trader, you're in heaven here. You know how to use these without gold back. Now, when you pop these on, you're like, yo, all right, bearish order block should form here. I should get some fair value gaps. Then I should get a liquidity void. It should run its motherfucking ass down to the end of the partition. And it does that. And look how long it takes. This is your Tuesday. You're out of the trade by Thursday, bro. You're done by, early Tuesday if you want. Take your first partial. You can pyramid on Wednesday if you want, 10:30 in the fucking morning. Run it again all day. You know the partition's not complete. Watch this here. You talked about how EQ has reaction points. It's a point of interest. Damn, Jay, you could have just said this like 15 minutes into the video. Why did you wait so long? I don't leave any stone unturned. That's the problem in trading, where a lot of people want to cut corners. And the way that we understand the logic here, it requires us to go check out all the things that we checked out. Talk about the narrative the way that we talked about the narrative. Look at time the way we did. And when we look at power of 3 liquidity, okay, it goes up. It's going to fill this in. We understand. It never took the partition all the way. It does here. It leaves liquidity open for you. So you're not to buy this. You're not looking for buys here. You're looking for sells every time it offers you one. And you trade lower. And look at that. And again, we're in the daily range above me. So don't beat me up in the comments. I know. I understand. I know. Now watch. We're going to go. My bad. I went negative. Going down. My bad. So we had to go. Okay. Now watch. This is beautiful. Look at the PA. All right. Oh my God. Such a good blunt. We talked about that. There's a, and then we're on the 9, right? So all the price action above this, after we break in here, let's go in order. What did you learn? We broke into a dealing range. This is our DR break in, and we trap price here one time, and we go back down. It creates liquidity here and here on the sell side. And you're in a premium, and we're already bearish. Do not look for reversals automatically. If it stops, you think it's the price swing is done, just wait. Just wait to verify it. All right. And how you're going to verify that is when you see this here consolidating, right? You're like, okay, got it. I'm not touching shit yet. We're not pressing buttons immediately. Wait for a second. But if you wait long enough, you're going to realize, hold on, wait, this might be liquidity. I do have some in here. I also have some imbalances that I do need to keep in mind. And we touch those imbalances here for sure. Now, outside of that, look at what's already been created to your left and look at the reaction points here. It has trouble breaking the imbalance, has trouble getting to these old highs, has trouble breaking the EXT level all the way. When you get these spikes here, you get massive retracements. And what does these do when these expand? Attack the liquidity. You can take trades from the EXT if you understand. But the problem is, right, and this is what everybody says, I'll save you the hassle now. Like I said before, the reason why price is going to be shown to you like this is because we're already in this dealing range. So when price is printing at the EXT here, you're actually in the level above you. So every time, again, above the 549, it's going to shift your indicator. I hate that word, indicator. But that's what it does, so can't be mad. You see what I mean? Your EXT level is nothing but your opposite or previous dealing range order block. See that? It goes a little above it, but that's my fair value level, right? See how the fair value gap candles attached to this level? So that's why it still works. But again, we're not bullish. So although this is in a little discount above us, it's going to have bearish shit to do. It's not going to run up randomly just because you're in another fractal discount. But that's what I mean, where, again, your indicator is shifting up only above that 549 here. So you're in this dealing range visually. Pops down, you're going to see it shift down again. Pops back up, it's going to shift up again. And then ultimately back down. So when you do shift down again, that's when you're interested, because all this has now printed. Again, we're going to highlight just this. When you drop down, you can take trades from it here, 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 here. I'm not super concerned only with PD arrays. If you see a nice CRT, a nice range runner, a nice expansion, and you see how price needs to take these lows out, there's a whole nother dealing range. Are you surprised that we get right there and consolidate when it's done? No, you're not. It told you where price was going to go. It completely told you. 540, and it lands at 540. It's not a secret anymore of where price is going to go. You just need to understand structure and context. If the price is like a book, you need to learn how to read it. It's screaming at you what it wants to do. You just don't know it that way. 9 dealing range. I didn't even go to a 27 yet at all. Don't need to. I could come in, trade 3s and 9s on SPY all day. What's difficult about that? What's difficult to make 10,000 doing that? You let me know. Next video, we're looking at QQQ. All right. Hopefully you learned something in this video. And we'll talk again on our next one.